So what do we see? We see an industry that's growing from 2 trillion to 200 trillion.
Bitcoin is on a trajectory toward the $200 trillion mark. Hit the like button if you share this view. If you don't agree, stick around and watch this video because Michael Saylor, Treasury Secretary Scott Bessant, and Wall Street's Scott Edelman have all just laid out compelling reasons to invest in Bitcoin and crypto by 2025.
What is the argument that crypto should be a part of your overall investing portfolio, and how much?
In fact, not investing in this could be a monumental mistake for you. So make sure to watch this entire video, as this year might be your last chance to get in on the action.
Can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
This sentiment isn't just mine, it's echoed by Kalen Moss. It's fascinating to observe how Michael Saylor, Scott Bessant, and Scott Edelman's perspectives on Bitcoin and crypto converge. Yet, each viewpoint offers unique insights. All of this unfolds against the backdrop of today's FOMC meeting.
Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years?
Fed Chair Jerome Powell has stated that the Federal Reserve isn't in a rush to lower interest rates and will wait to assess the impact of President Trump's tariffs before making any decisions.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that.
Now, there's no need to panic. Things could unfold as macro expert Dan Tapiero suggests. Tariff uncertainty is likely to hinder China's growth prospects. The Bank of China has lowered rates to 1.4%. This uncertainty will have a similar dampening effect on the US. If the US faces a hard slowdown and the Fed brings rates down to 1.4%, which would be a drop of 250 basis points from current levels, just think about how high Bitcoin could rise over 200K. At the same time, Treasury Secretary Scott Bessant is addressing Congress to explain why the US must establish itself as a leading hub for Bitcoin, crypto, stablecoins, and all digital assets.
Can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
Yes, sir. We believe that the United States should be the premier destination for digital assets. And as members of this committee and the Senate are attempting to do, create good market structure around that so that U.S. best practices are used around the world.
And that's really the point, right? Is having American U.S. best practices to sort of set the pace for others to follow rather than us trying to fill in the holes that others, that may be created as others set that pace.
Yes, sir. And also, that digital assets are an important source of innovation that can drive usage of the US dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.
Michael Saylor consistently emphasizes to corporations the need to hold a portion of Bitcoin on their balance sheets, since the US dollar continues to devalue while Bitcoin is on its way to hitting the 200 trillion mark.
So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. You don't want to miss the next wave.
The momentum is building, and it's no longer just Michael Saylor putting Bitcoin on his balance sheet. There are now over 70 corporations actively acquiring Bitcoin for their financial statements. Metaplanet is one such company, and its CEO has indicated that this is merely the precursor to a tidal wave of corporate adoption.
We were inspired by strategy and executed began the execution last year, and now, certainly in Asia, we're being approached all the time by other companies looking to have conversations, looking to understand the playbook, looking to understand what the pitfalls might be, how to explain to their boards, who to surround themselves with to ensure that there's an easier path forward. And so I think this is just the beginning. This is the, perhaps in the Japanese context, say, the beginning of the tidal wave of more and more corporations around the world adopting Bitcoin. I think it'll be irresponsible for companies not to look at Bitcoin and not to purchase Bitcoin on their balance sheets. And time will tell which ones are the ones that come to the table last.
At a Bitcoin for Corporations conference, Fidelity's representative discussed why corporations should consider adding some Bitcoin to their balance sheets. This advice from Fidelity speaks volumes about increasing shareholder value.
Shareholder value. And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin? Thank you.
The CEO of Strategy has indicated they have substantial plans for this year and the next, aiming to lead the charge and helping other companies figure out what they now understand.
We're going to, over the course of the next few months, publish a BTC standard model. Like we did last year, we published a Bitcoin model in 2024. We're going to publish a model and open source it, share it on GitHub and other places, so that you all, if you're interested in understanding how Strategy thinks about our investment decisions, you can start to build your own strategy models. But more importantly, as other companies adopt a BTC standard, they can start to have models and tools too. And we are extremely appreciative and understand the responsibility of being the first and largest Bitcoin treasury company. When we see companies adopt some of the BTC KPIs that we've established, Metaplanet, who you heard from yesterday, Cooler, who you heard from yesterday. So that's the reason we want to publish this model, is so other companies can start to adopt it like they did the BTC KPIs. And probably most important for all of you is we need to educate folks. The Principles of Corporate Finance, written in 1988 by Stuart Myers, needs to be updated. And it needs to be merged with the Bitcoin standard that's written in 2018. We need a book on the BTC standard, right? We're writing the book as we go along. I think it's going to be the book that people will read and teach 20, 30 years from now. And it's exciting to be sitting here talking about the future of finance.
Before we get into some additional insights from Wall Street, make sure you subscribe. Bitcoin won't stay below $100,000 forever. When it breaks above that threshold again, we'll be leading the pack. Now, listen to how Wall Street is positioning Bitcoin and crypto. There are both similarities and differences in how Michael Saylor presents Bitcoin to corporations versus how Scott Bessant talks about digital assets to Congress. Regardless, the underlying message is clear. Bitcoin and crypto are poised to soar higher. See you soon and bye.
What are you telling your clients now?
Well, I'll give you two pieces of this. Number one, Bitcoin clearly over the past 15 years of its existence has been the best performing asset class in history, bar none. It is widely expected to continue that track record over the next 10 years. So on an attitude of trying to create wealth long term, crypto makes a lot of sense. Second, most importantly from an investment advisor's perspective, Bitcoin's price movements are independent of all other asset classes. The prices don't move in sync with stocks or bonds or real estate or gold or oil or commodities, and that makes it a perfect addition to a diversified portfolio. If you engage in rebalancing, which all investors ought to do periodically, owning Bitcoin helps to lower the risk of the portfolio while improving the returns. A risk-adjusted profile is one of the big claims to fame of adding Bitcoin to a diversified portfolio.
It's really the big claim for adding to anything. I mean, why do I need a new asset class? Okay, I have stocks, I have bonds, I have a nice fund for short-term money. I have a money market fund, and I have a little bit of gold. Why should I add Bitcoin. Your point is diversification, lower volatility, potentially adding to returns. Those are good reasons.
That's all there is to it. In other words, if you believe in modern portfolio theory, if you believe in Harry Markowitz and his Nobel Prize-winning research that says investing is as much about risk as return, we want to manage that risk. We want to diversify so that we don't have 12 eggs in one basket. We have 12 eggs in 12 baskets. Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years? Last time we had a new asset class was the discovery of oil in the 1850s. This is a wonderful opportunity to further improve the diversification, and all the academic data tells us.
And what percentage are you advising at this point?
Most are recommending in low single digits, 2, 3, 4, 5% allocations. But if you talk to people who are deep into crypto, they're doing between 10 and 40% allocations to crypto.
Yeah, so it's a lot of risk there. Considering the volatility of crypto, it's a lot of risk.
If you recognize the investment potential, you recognize the value of rebalancing, and you can afford the volatility in the long term, it can make a lot of sense.